Hey everyone, it's Casey Dimon here, and we're talking about tax sales in the state of Louisiana. Now, Louisiana is a tax lien state. This means that after property taxes have become delinquent, a lien is sold against the property. They don't sell the actual property itself as they would at a tax deed auction. This lien gives the tax lien holder the right to collect the past due property taxes plus interest, which is usually where you're going to make your money as a tax lien investor. The state of Louisiana is interesting. It uses an ownership interest bid down method. What this means is that the investor willing to accept the lowest percentage of ownership in the property, should it be foreclosed, will become the winning bidder. While many properties are sold at 100% ownership rights, they could be sold as low as a 1% ownership. This means that if the lien was eventually foreclosed, you would own, well, 1% of that property. We'll talk about more on this shortly. Regardless of your ownership interest bid, the investor will receive 5% penalty plus a 1% penalty per month until that certificate is redeemed. The defaulting property owner has 3 years to redeem that property and pay off the taxes due, thereby canceling your lien. So regardless of whether you won the auction by bidding a 100% ownership rights or 1% ownership rights, the amount that you're going to receive when it's redeemed is the same. You'll receive, again, that 5% penalty plus that 1% per month penalty. Doesn't matter what your ownership bid was. Now, if the property gets to the point of being foreclosable and you won with 100% ownership interest, it's a fairly easy process. You foreclose the lien and you become the owner of the property. The complications arise when you own less than 100% ownership of the property and the property is not redeemed. In this situation, you basically have two options. You can sell your proportionate share of ownership back to the original property owner if they will buy it. You have to remember they didn't pay their property taxes in the first place. Or number two, you could sue to force to sell the property on the open market. If it sells in the open market, you would walk away with your percentage of ownership. So if you own 1% of something, you'd walk away with 1% of the proceeds. And of course, you have to pay your attorney to take it through that lawsuit, so you could lose money there. In nearly every instance, if someone bids less than 100% ownership, they're usually gambling and hoping that a defaulting property owner will redeem that property. And their intention is to earn interest on their money and not to actually get the property ownership. A simple Google search of the name of the parish that you're interested in, followed by the words tax lien, will take you to a website of the local city or parish, and you'll be heading in the right direction once you read all the rules. To read all the legal information about the state of Louisiana's tax liens, type in Louisiana Revised Statutes, Chapter 472157 into Google. I really hope you've enjoyed this video of the Louisiana tax foreclosure laws. To read more about other states, head on over to taxsaleacademy.com and click on the state guide. Have a wonderful day, folks. Bye-bye.